Certainly not impressive, the kind of numbers that have filtered through, to say the least, and that's possibly why this ordinary dividend of 145 cents was declared nevertheless, to just keep investors happy to the little extent that Telkom possibly can at this stage.
Now, obviously, the investors are obviously not making any money on the share itself, so they have to be, I think, appeased somewhere. But the results, yes, disappointing. They've been under pressure for quite a while. Both from the internal restructuring, I think, process that's been underway for the past 18 months or so, and also from the external market environment. A lot more new players becoming more aggressive in the market and trying to lay claim to part of the Telkom revenue through new technologies, new products, VoIP expanding, for instance. Expanding data products, both in the mobile environment and the fixed line environment.
With that being the case, you know, those being the environmental factors that are currently at play and the competitive forces that are currently exerting themselves on a player like Telkom, it's very interesting that, yes, we've got the voice side of things starting to be put under pressure. That well, not surprising in the least, but then we've got data coming under pressure as well. And this is where we've seen others really leveraging off data for that growth moving forward.
Yes, I think that has been a bit of a surprise, that in the growth market of data, and also with emphasis placed on data as the next revenue generator that will replace part of the voice revenues and compensate for that loss. Telkom is starting to lose data revenues, even though the ADSL market itself has been growing. We've grown by, I think, about 96,000 ADSL lines year on year over the past year. But that would indicate that a lot of those lines are being actually sold maybe on a wholesale basis, and competitors in the market are probably gaining ground against Telkom in the retail market, trying to or expanding the customer base. And apart from that, a lot of pressure that's also being exerted by the mobile operators with mobile data services. So perhaps the growth of fixed line wireless and wireline fixed line data market is not as fast as players would have hoped because of pressure from mobile, which is the preferred choice among many consumers.
Well, from your side of things, what do we need to start seeing Telkom do? Because being highlighted in this result is that they've got full year capex expected to be between 15 and 20% of revenue moving forward. A lot of focus being placed on the mobile arm of things in South Africa, and that with regards to its data operations.
Yes. Well, Telkom used to, in a sense, reinvent itself, and it has been talking about it and starting to put the building blocks in place to begin reinventing itself from a traditional into a next generation company, for lack of better words. That means offering services that deliver content as well as voice and data services, internet access, for instance. Telkom has indicated they're moving into the VoIP environment now. They've been talking about converting voice to data services, effectively providing digital voice applications, SIP trunking, for instance, for the enterprise or corporate market. And they have been talking about content generation. What Telkom is also now hoping to achieve over the next, say, 2 years or so, is to be able to leverage its fixed line operations and its fixed line network in conjunction with the mobile network they've been building out through ATA, and become much more of a converged player where they'll be able to offer a truly converged services through single billing, through on a mobile, a fixed line platform, as well as data and voice services, all wrapped perhaps into a single offering to individuals or to companies.
What kind of new hope does it give you, the possibility of South Korea's KT Corporation vying for this 20% stake in the operation? Because we know that KT Corporation has this reputation of being a master at a turnaround strategy to some extent.
Well, there are two factors to it, I suppose. One is pure money. They are going to offer Telkom a chunk of money, I think $600 million for the 20% stake. Telkom is launching an aggressive expansion capex strategy. You mentioned 15 to 20%. They will need money to sink into network upgrade, network expansion, and development of new products to go on top of that. Apart from that, they can probably learn from an experience perspective. They can probably learn from the Koreans, because as far as the company itself is concerned, because Koreans have effectively become a converged operator, merging the mobile operations with the fixed line operations and introducing merged services into the market. I suppose the question remains, how relevant is Korea to South Africa as an environment, as a market.
And also, how relevant is a 20% minority stake in an operation like Telkom?
Well, it certainly won't give them management rights to be able to lead the company, but I suppose the idea being that they will have a lot of input and be able to influence people, and people who manage Telkom will take heed and perhaps walk away with learnings from the Koreans and implement that, or try to implement that. But it is, you still have to translate it into the South African environment with all the different stakeholders that Telkom has to contend with, pulling in sometimes in different directions, and also into the external market environment. We don't have yet big rises apartment block type environment where we've got dense population that can, we can deploy a fiber optic cable to it and then wire up the whole building, and at one go you've got 20, 30, 50, 100 families using your services. We're still very different from that. And from an affordability perspective, still very different from Koreans, obviously.